Okay, all right. Typical question. Can you see my screen and hear me clearly? Perfect, thank you. All right, welcome everybody. This is Steve Morrow, Beat the Market Maker. It is Wednesday, October 5th, 2022. Welcome to the session. Okay, so here we go. We are finally done with the third quarter and we're starting the last run of the year. Okay, for you new guys, I know there's a few of you in here. I think I've seen Lauren in here. All right, so here's the deal. We use a book called the 12-week year and we map out our quarters. The book is kind of based on sales, but it talks about treating every 12 weeks aggressively like it's the end of the year or whatever motivates companies or corporations to like their last hard push. It's usually their end of their fiscal year. In most cases for us, it would be New Year's Eve. So there's a spreadsheet in the forum and it basically tells you how to score your work as like for trading, but kind of like in a salesy type of way to understand it. It helps you set goals. The book's very interesting. Anyway, it's by Brian Moran. So here we are. We're in the fourth quarter. We're +5. Okay, October 5th, and there's 87 days left to New Year's Eve. So that's the end of it, 2022. All right. So what you need to do is you got the whole quarter in front of you, man. It's fresh. We're sitting right here. Okay. So this is going to be week 1, 2, 3, 4, 5. Right? 6, 7, 8, 9, 10, 11, 12. Okay, so it's kind of tough. We got some days in here we won't use, right? We know that this week is spent on Thanksgiving pretty much, right? It's always the last Thursday of the month, I think. So that's probably gonna be Thanksgiving this year. Okay, then Christmas, I'll probably break around here and we'll be off these last 2 weeks. So we'll probably have a DMR on the 7th and the 14th. And that'll be the end of it for the year. And then we'll get back maybe sometime between January 5th and 6th, depending how it lays out. So if this is Saturday, so the first is going to be Sunday, the second will be Tuesday. Don't know if we'll be back that week, but we'll figure it out. I'll get with Carr and Jim, and we'll figure out what the schedule is going to look like. So this is it. This is what you're looking at. You got a shot week, right? We know November 11th is Veterans Day, and the U.S. markets are closed. So this is the deal. This is what you got. This is what you're looking at. You're looking at your last 12-week run of the year with the last 2 weeks of the year off and a burnt week in Thanksgiving. So you got 11 usable weeks minus some other personal business you may or may not need to tend to. So you need to take the working days and lay out some type of plan for the quarter. If you're brand new, maybe the goal should be to watch a video Monday, Tuesday, and Wednesday, and then mark up some charts and send them in Thursday and Friday. I'm just tossing some ideas out, different ways people have approached it. If you've been around a while, then you need to map out your trading plan. Okay, so if you have your business plan down, you need to say, okay, I'm going to trade Monday to Thursday. I'm taking Fridays off. And if I have a losing week, I'll try to get some recovery out of Friday. You'll add Friday back and trade 5 days. If you want to build a 3-day model, you have to figure out with the spreadsheet how to put this all together to be profitable. Okay, so if your goal is 30 pips a day, right, 3 times 4 is 120 pips for the week. So you do a 4-day trading plan and then you add Friday back if there's an issue minus non-farm. Okay, so let's say you don't hit your goal of 120, you hit your goal of 100, then your goal would be to try to book another trade on Friday to hit your 120 target, right? So 120, 240, 360, 480 would be your target for the month, 480 pips. Then you take this number, you put it into the spreadsheet, and it gives you possible equity growth and equity curve and what you can expect to earn. And that's it. And you map that out for month 1, 2, and 3. And you have your end of year targets. You have a benchmark for each month where you're supposed to be in the process, and you basically check yourself, man. You check yourself along the way. After the first 30 days, where are you at? Did you hit 480? Did you hit 400? Okay, what was your growth on equity? What was your ROE, right? Return on equity. You know, that's my favorite metric. Everything else is bullshit. What's your return on the capital? All right, that's it. Simple mapping, but it's an important part of business. A lot of people throw money at me, they start trading, and they curse me out in 5 different languages. 4 of which they don't speak. That's not how it works. You got to have a plan. You got to come in here aggressively, and you got to do your job. My job is to convey the information to you. Your job is to figure it out, absorb it, and turn it into your own. Make it your own, make it your own style. That's it, simple. But yet there's a lot of guys that are just not doing that. All right, here's the book, 12-Week Year by Brian Moran. Map out some possibilities for the remainder of the year. Keep in mind holidays and how many working days you got left, right? We got about 11 working weeks figured out from there, right? Here is a field guide. If you read the book, this is basically like a goal sheet to use. And the whole premise of the book is to get more done in 12 weeks than others do in 12 months. And then you replicate. This is a repeatable, replicatable plan. Doable. Hey, Mohammed, I see you got the time thing figured out. All right. So I want to get right into this stuff. I want to do some high-low drill follow-up. I've been getting a lot of emails about this. We talked about the high-low drill, and I think it's the most important drill. And I'm going to show you what happened with me when I was doing it in an article that came up from 1987. And I'm going to show you some crazy good stuff. All right, so excuse me. Let me grab a drink. All right, see if I'm good. Okay, so I got this email, and this is not the only one. I got about 10 of these. I even think I won't mention any names. So here's the deal. Thank you, Steve, but I've been stuck here for months doing drills. I can't figure out how to take the next steps. Any advice on how you can level up? Well, yes, I have a lot of opinions on how you can level up, and I'm going to share one with you tonight. And this is probably the best evolution of rolling out of the high-low drill into being profitable. So the question was put to me, how can I take a simple drill and turn it into real money? And the answer is it's a simple drill, so it's simple. You develop an aggregate low loss entry system based on your ability to see the high and low. Okay, so I don't know, 20 years ago, I was doing the high low drill and realized that my skill set had improved greatly. I was rarely losing any trades. So how can we turn this into a systematic approach? Right? You realize the high low drill, you're trying to get you start off with more orders and you scale down to a smaller amount of orders to hone your skills. So if you're struggling, like the person that wrote this email, and I know there's quite a few, pay attention. This article was written, I think, in 1987, says how to trade like a dealer and avoid death by 1,000 stop outs. So if your stop is too tight and you're having trouble struggling with the direction, trading in this fashion is going to help you accelerate your learning curve, get in the market and get executing trades and get out of demo, all these things that hang people up. I'm just going to leave this up here. You probably can Google this article, but since it's a recording, I'm stopping at every page for a second to let you read it. You can pause your screen when you go back. So look, basically what the premise is that you're looking for your entry and then you scale into the pullback. The author in this article, this would be his 3 entries. I have no idea why he got in there. There's no rhyme or reason to me. But the idea is if you read this closely, I think I have a clearer picture of that chart. The idea is he scales weighted. And I'm going to tell you the 2 different ways to scale it, and we'll talk about it from there. So basically, he's trying to catch this low turn, right, this pullback turn, and he's aggregating orders into the level, which is very similar to catching the high-low drill. All right, I'm going to pause at this page for a second. Okay, so the idea is, does this work? Well, when I first started in the business, right, you guys know my videos from early, you buy or sell the stop loss level again, right? If you get stopped out, if you're in a trade and the trade goes against you, you know that they hit the stops in 20 to 30 pip increments, right? So you could put a buy limit over here. When they trigger the stops again, you have 2 working orders and price starts moving your way. So this statement is about 18 years old, and this is what's doable aggregating your entry. Okay, so here's the deal. Let's see. If you look at, there's no loss. This is the only actual closed loss, but it was aggregated between 2 pairs, right? 5 lots apiece. So this was about a $650 gain on a loss and $1,000 win. Okay, if you start looking at them, right, these cycles, they turn very profitable really fast. So some of you say, okay, Steve, yeah, that's great. You had a big account. That's easy. No, I didn't have a big account. I created a bigger account. So I have a picture from 18 years ago. It was the first time I ever earned 1,000%. So I took a digital picture. Okay, you got to remember, man, 18 years ago, the first digital camera came out. Some of you guys are going to know what I'm talking about. And they used to give you, it didn't even have an SD card, a wire. You plug it in your computer and you download whatever was stored on the camera. And it was grainy and crappy. And this is all I got. I went through all my stuff, and this is all I could find in my old archives, right? So this was decent money for me. I was earning about 50,000 a year as a fireman, 3,000 to 37,000, slightly over 1,000%. And that money was parlayed into the next size, and then traded as normal. So, but here's the deal. It's a new time in the business. Everyone has access to get funded. There's guys going crazy, running 2 and 3 accounts in the group. I showed you 2 weeks ago now, or last week, about a guy that earned 1,000% on $100,000, and he qualified for a funded account. There's another gentleman. I didn't mention his name tonight, but I didn't get his permission to mention it. I'm waiting for a certificate. So you know who you are, dude. You just sent me the email. So give me your permission. Send me an email and give me permission. So anyway, look, this is unprecedented stuff, man. When I started in the business, I borrowed $3,000 off a credit card. That's where that came from. That was a credit card money, man. And I scaled it. Okay, so if I had $3,000 today, I would buy the highest level account and allow myself, I don't know how much an account is, $1,000 to try it. Anybody know? I would give myself 3 stabs at a funded account with the same 3,000. And my equity would be 200 grand or 500 grand. What's the account size? Anybody know? This is the opportunity now. It's a new time. It's wonderful, man. Okay, someone told me 200,000. Okay, whatever that costs. You take your equity you're going to use to trade, and you use that money to get yourself funded. But look, they have demo accounts, they have rules. If you can't pass their demo, you got no business throwing money at them. Don't be like, oh, okay, next time I won't do that shit. No, you pass their demo, you qualify in demo, and then you pay them and you qualify for real. Okay, so whatever it costs, if it's $2,000, 1,000, whatever it is, you got to do it. You have to do it today, man, because you get the opportunity to go from 3,000, right, that you have, or 2,000 you have saved up, to have an opportunity to control 200,000. Start doing the math in your head. If you have $3,000 and you make 10%, it's $300. If you have 200,000 and you make 10%, you have a business, a legit business. So anyone that needs help getting funded, you need to talk to me. We'll get you set up. So back to this entry system. I'm losing track of my slides. Okay, so yeah, follow the rules by these guys, work in the confines of their system. And what you need to do is, when you get self-funded, you need to separate out some money so you could be, when you get funded, you need to be self-funded. You need to, if you're making 25, 30 grand a week, you need to put 10,000 aside. And in 10 weeks or so, you'll have what you need as reserve equity if something happens to the companies or this stuff goes under. It's just the nature of the business, man. Stuff doesn't last. If it's not a sustainable model, it won't last. But a lot of companies are popping up. It's a great time, man. Great time to be in the business. All right. So the inner workings of structure. We know that stops are triggered about 30 to 50 pip swings, right? Pullbacks are issued in 10 to 20 pip swings. It's very pair specific. If you're trading pound dollar, trading euro versus trading GJ, EJ. But here's the deal. If you're going to trade these cross pairs and this other stuff, then you have to map it out. I did it already. It's not for me to do and tell you. It has to come from you. You guys remember, I gave you all the swing levels on different charts, and maybe 3 people took it from me and have done anything with it. If you remember a girl by the name of April Yang, she went on to become very successful. And me and her mapped this stuff out together, and we posted it. And nothing, crickets, man. So as I've been teaching over the years, when I say certain things, it falls on deaf ears. Unless you physically do the drill, you're not invested in it. I can hand you a sheet with numbers on it, and it means nothing to you. So what I'm telling you is invest your time, invest yourself, because the reward, the way things are and structured now, that you can get funded, the rewards are faster and more amazing than ever in this business. It's a great time to be alive. It's a great time to be a rookie in the business. It's amazing, man. Okay, so there's two structures that you're interested in: the high-low formation, right, M's and W's, and the pullbacks off of the first impulse, the apex nadirey thing, right? I had to put it in there, nadirey thing. So who cares about those two areas on the chart? These are the main areas that allow for the maximum use of ADR. You understand? If you can't locate these setups, you're not ready for this. You need to go back and do some work, man. And it's pretty important stuff, right? So we're looking at, what are we talking about? We're talking about an M&W retest, right? Apex nadirey thing, right? These two areas on the chart. And then we're talking about the moving average first crossover bounce, a 50 bounce trade, intraday bounce, whatever you want to call it, right? Area 1, area 2, long and shorts, 4 trades. These trades, these setups allow you for full ADR. If you're trying to grab 50 pips, 40 pips, whatever your number is, this is the highest two probability areas that you're going to see those numbers. Why? Because you're coming off the anchor level 1, which gives you the biggest push. You can combine push 1 and push 2 intraday, or impulse 1, impulse 2, and it's going to give you your plus 50, plus 40 relatively easy. Because then you know after level 2, right, you get a 50% pullback, and that messes people up. You should be in here or here and out before that even ever happens. And you should bag your float for the day. Okay? This is important stuff, man. If you can't locate this, get with me. We'll figure it out. All right, I just said this. These two areas on the chart allow for the full possibilities of achieving 50 pips of profit or greater, because you have the entire ADR available and in front of you. Okay, there's going to be choppy days. There's going to be days when it doesn't fulfill. But on those days, if you're in the right spot on the chart, you should at least scratch. Okay, so scratch is better than a loss, always. All right, there's two types of way to enter on a high-low style or an aggregate entry, right? Equal orders and weighted orders. All orders have to have a hard stop. There's a lot of people that take like 50 orders in that structure and they blow their account. They don't use a stop because they think they're right. That is absolutely what I'm not advocating here. I seen some people in the group do that, and I got on to them and they got all offended and said, Steve, that's what you do. That's not what I do. I showed you what I do. Couple of orders aggregating into the level. Okay, so whatever you're trading, wherever you're trading at, everyone has their own commission structure, spread structure. You have to work within the confines of what they're offering. You got to know your break even on the structure. Okay, why did I choose equal orders? Because a lot of times the first order would be the only order picked up, and basically you would do a 1, 2, 3 orders, or a 2, 4 orders when you scale, right? But if you do a 2-2 or a 4-4, if this is the only order that goes to profit and these get canceled out and you go to break even, then at least you have a good size order earning money. I mean, you know, a tough problem to have. Where you scale the first order and it goes right to profit, you nailed it, but then you got your other pending orders sitting and you're not having any luck. Okay? So I chose equal orders. There's weighted orders, and it depends on how good you are. But no matter what, you can't over leverage the account, right? You should set up 1 to 2% grids, and I'll show you how to do that. Okay? And you must know the break even, including commission, to close the structure. The negatives, right? I just said it. The second order doesn't get picked up, only half profit seen. If you're only getting the first order picked up, you're getting pretty good at making entries. Then you start scaling into a regular trading system where you're taking one all in, all out on one lot. But this is basically training wheel style to get you going, right? You can't scale lot size as quickly as an all in, all out trader, but you're going to have very little drawdown. Very little drawdown. And this is why Heidi Close All was invented. You get your orders on, you drop her script on there, and it cancels all the pendings, closes everything off the board, and you're flat. So if you're watching that, if you have one order in negative, one order in positive, you need to find out the tipping point. So that's how you build your grid based on where the tipping point is. You got to see what you're doing, right? Weighted size, if you want to know about weighted, write me. We'll talk about it. And by the way, these ideas is where the 3-bet 50 came from. And you're better off getting qualified today. You don't need the 3-bet 50 anymore. This system was invented using your money earned or dealer equity to grow the account more quickly. You're wasting your time, man. This is the only way right now. You just gotta look. I'm slow to adapt for stuff because I know there's a lot of bullshit out there. A lot of people. There's a couple companies that people paid the money, never got funded. That's the kind of stuff I hate about the business. Those guys made off. They do it in a foreign country. Good luck in Cyprus somewhere or Belize. Good luck getting your money back. So it's been around. People are getting checks. People are getting passed, and they're doing well. So I'm on board, and I'm pushing it for the group. You guys need to do it, period. All right? Keep me posted. Let me know what's going on with this stuff. So I preferred even size because my first order got picked up a lot, and I'd like to earn as much as possible on that first order. I was purposefully triggering my second order as my skill set improved. So what you need to do is build 2% risk grids, and you need a stop of a 10 or 20. There's 2 types of grids. If you're brand new and you're having trouble getting these spots on the chart, you probably should start with a 3-order grid. Right? You can run them both and see how the return on equity works out and what the curve looks like and see how you feel. You have to constantly be reevaluating yourself, but you got to realize 3 orders are going to be smaller, right? If you're using 4 orders, you probably would go, I guess would be 6 orders, 2, 2, 2, right? And this one may not get picked up, but if you added one here on a 2 grid, you would be doing 3 threes, right? 3, 3. So that's the difference. You're gonna get paid out on 6 versus this may or may not get picked up. Okay, how you build a grid. So we're looking for M&W formations, right? And we want to enter, right? You split the W in half, and a lot of people are struggling with this. Okay, so a lot of people are getting in here on the drill, and that's fine. You're trying to catch the absolute zero over the day, the swing. But as you evolve, you need to cut the W and the M's in half. And you need to enter on the go side. I've talked about this before. This is go side. This is no go. And what you want to do is price is rising. You want to sell on aggregate into this level. The easiest thing to do is to find out the measurement from here to here. And it's a common measurement. It's pretty standard because that's how they trigger the stops in these in these increments, right? So let's just say the whole grid is 25 pips from top to bottom. So you want to get, as price is rising, you want to get your first order on here, and then 25 pips higher or lower here, and maybe a 10 pip stop above the whole grid. So your structure should look like this, like this. This would be a market order open. This would be a buy limit pending, and this would be a hard stop on the entire grid, 10 or 20 pips below. Depends on how good you are at finding the area. Okay, does that make sense? If you're doing a 3 grid, cut the M in half, no go. This is no, this is go. All right, you're on this side of the grid. When price hits the apex nadir thing and starts turning, you start aggregating into this area. You go market, limit, stop. If you're going to do a 3, you go market, limit, stop. That's it. And the idea is to spread this out as price moves against you and get in and not get stopped out. Makes sense? Everybody understand? Okay, there's some questions. Let me take a quick look. Hold on. Okay, sorry, audio was lost. Okay, so the question was, why does anyone want to get funded? So it seems like, okay, it says funding adds a responsibility to another party that I prefer to do it on my own. Okay, I get that completely, but do you have the opportunity to trade 100, 200 grand? If you do not, then you need to be maybe responsible for another 6 months to a year and take out some massive checks and build your account quickly rather than struggling with the $5,000, $7,000, $10,000 account and trying to scale it. Plus the responsibility of trading someone else's money. I understand correctly. I don't know for sure that you're not responsible for losses if you draw the account or blow the account. So that being said, you got an opportunity to trade 200 grand and follow some rules and have some discipline, which is very good for you as a trader. And then you can scale enough money in your own personal bank account and you'll be autonomous as hell a lot quicker. Okay, not everybody in the group is doing 500%, 1,000%. You got to understand the market and you got to be fearless and just go in hard. Not everyone's doing that. There's a handful of people in the group. I talked about it a couple of weeks ago, and they're doing really well. But that's not the norm. A lot of people were mad at me, surprised. You don't know it's possible until you know. And that's what the whole point of that webinar was a couple of weeks ago. All right. Is my audio good? All right, thanks. Okay, so look, it's a personal choice, but if you only have a couple $1,000, you absolutely need to get funded. Take out some money. If you want to buy a $50,000 account and you can make 10% a week, okay, that's 5 grand a week, 3 or 4 months, 5 months, you should be able to scale using the spreadsheet, take out 50 grand for yourself and then be done with it. Then you're truly autonomous. Because now you've had practice trading 50 grand of their money. Now you roll it into your own 50 grand. You're practiced, you know what you're doing. You have some discipline because they make you stick to a set of rules and they keep you within the confines of that or you lose the account. So there's a lot of value in it. All right. So this is basically what we're looking at. We're looking at some type of grid. So this is a clear picture of that chart. So if you look what he was doing, he was like scaling the size. And this works because the idea is to get the weighted amount here because this order is going to be at the turn bar or at absolute zero. That's the point. You want the heaviest amount of orders on the turn bar. But, I don't know what the hell he was thinking here. I was thinking, all right, maybe this is a W or an anchor. And then he thought when he saw that hammer, he'd go in. Then he saw, I don't know what the hell he saw. He went in over there, and then he finally got this hammer and went in, and then it turned in his favor. The only thing I don't like is he scales out. Not a huge fan of the scaling out shit. Everybody's got a different opinion on that. The thing is, if you're going for 50 and you know where it's going, then you want all 3 orders off at 50. You don't want to take some off at 10, some off at 20. It's going to piss you off, and I promise you, if you do that, it's going to piss you off, and you'll start holding it for the full boat because it's a lot more money trading all 3 orders on the right side of the W and getting them all out in one position spot. Because a lot of times this will pull back, and then if you trail your stop after you take 2 out, you'll get tapped out over here, and it creates more work, and you're not going to get paid out in full on all 3 orders, and it's problematic, man, because then that changes your dynamic, changes your account growth, changes the stop. And I think when you do stuff like that, it changes your psychology and makes you do, I don't know if the right word is dumb or different things than you should be doing. It gets you off your path, right? Moving stop to break even or getting stopped out multiple times. It takes you off your path, man. It changes your psychological makeup. Nothing has changed in the market. Your opinion has changed in the market because you got stopped out or something happened to you, right? So you're projecting your fears and your anger on the chart. The chart didn't do shit to you. You did it to yourself. The chart is a chart is a chart. I've said it for years. It do how it do, right? It does what it's going to do. It's your perception of that created from the negative stuff that's happened to you in the business, getting stopped out, blowing an account, whatever it is, losing your money, getting in drawdown, lifting your stops, all the things that you do, then you turn around and project that stuff into the market. And then that becomes your reality. And it's like, I don't know if that's like too weird for you to understand, but that's basically how everything in life works, right? There's the same reality everyone's in, it's perceived different. Your filter through your life experiences and what has happened to you as a trader, having open float, losing accounts, busting money, getting in a fight with your wife or your family, right? That trading's bullshit. All those things you're holding inside and you're seeing them in the chart. That's why people get in a trade and they're up 5 and they go, I won, click out. Then it goes for 55. It's just part of the business and you have to work through that as a person. But the market is the market. This shit's been doing the same patterns, the same stuff, right? I always bring this up. Jim showed me a bond trade from 1875 in the Wellington market, and it was a perfect W right before a big rise. They pulled back, shook everybody out, painted a W in the 1800s, and they got all the lower level shorts trapped, and they rose the market. So what does that mean? Human behavior is unchanged, greed, all the things that people or fear or afraid of or excited about, it's all the same, man. It hasn't changed in centuries, literally. All right. So you got to become more deliberate than this guy in 1987. All right, for sure. So you're going to measure the M&W formation, you're going to measure the pullbacks, and you're going to measure the stop hunt zones. Right? Most of us in here know more than this author. Kidding, kinda. I mean, I don't know where the hell he came up with this. This is just I don't know if this is random in the article or that was really his entries, but you understand the point. Okay, so let's look at this guy's stuff. This was submitted to me by the same guy that wrote the email, and I want you to look at, literally, if he didn't stop himself out on these orders, he would have had a beautiful run. He caught the low swing of the day, right? So we're going to take this level, right? Because this is the apex, right? I didn't know I actually knew that, right? That's the apex. Okay. You're going to take these levels and you're going to box them in. And you're going to figure out the stop needs to be below this low swing. It needs to press in here, and this is going to be your go zone, right? Cut this in half. This is the area where you want to start executing. Okay, he has 3 orders on. He stopped himself on 2. He caught this one, and he tapped out too early. But he caught the low of the day within a few pips. So we don't necessarily, when we're trading aggregate, we don't necessarily want the low of the day. We want the low swing, second leg M&W entry, right? But we want to get our orders on in here or in here. This is the opportunity right here. So if you're trading a 20 pip grid, you're going to go looking for the low swing, right? You're going to put an order here for 20. And when price starts pulling back, you're going to go market above, and you're going to have a stop below the low. You need to find out what this distance is or normally is, right? The distance where the second leg stops short, second leg when it traps through, you need to know those distances. So you want to put, in this instance, I don't think the second order would have got picked up. You should put the second order here, stop below this, and you should aggregate 20 pips higher in here somewhere. If you're using a 3 grid, it'd be 20 pips higher here and maybe a 10 pip stop. So basically, look, 20, market, 20, minus 20, If you're doing 3 orders, minus 20, minus 10. That's your aggregate. If this stops getting picked up because you're getting good, then this becomes minus 10, and you cancel that order and get rid of this, and now you got a market 20, 30 pip grid, 2 orders. So you're looking to get in here and here, and then this goes in your favor and you close all out at plus 50 or whatever landmark is there, an average. You're basically buying or selling the stop loss level again. I can't stress that enough. If you get in a trade and the dealer comes down and goes to hit your stops, he's hitting the stops on everybody else, and he's dragging your second order in. You're still hot, your order's still good. Okay, if you're trading, you can trade 20 pips below this. You can do a 20 stop loss level, right? Because then you're 0 entry, 20. You got basically a 50 pip grid. 20 and 20 is 40, and then add 20 for your stop. You're looking at a 60 pip spread. If you can't catch the higher low in a 60 pip spread, I'm failing you horribly. Okay, so this is good drill. This is good work, man. He did the drill on this. He's using 3 orders. He nailed that. He took the stop here. That's okay. But had he not had a stop and he had a grid structure, he would have took all 3 of these orders into pay dirt, and that should have been the target. Make sense? This is more common, this setup right here, and this is good. But again, he stopped himself, and then he caught it. Damn near perfect, right? Same thing I just did. Okay, very important. Some elements here, right? We know that this is coming in the stop hunt. You got a quick cross down. You got a quick false move, hammer rejection on the tracer. Okay, you're going to draw the box. You're going to stretch it out into imaginary space because you don't know when it's going to come in, but you have a rough idea. You want to trade on the inside of London. He's got that covered. The shadow boxes are there for a reason, man. If you're trading London, you trade shadow to shadow, right? Because you get this consolidation going into the US session and a quick stop hunt, and it gets active. If you're trading US, you want to trade from here to about noon, right? That's my vampire box. I'm done. All right, big fat W. What could he have done different in here? Well, he shouldn't have stopped himself if he was aggregating, right? His apex nadir, in this case, right? Nadir, it's pretty clear. Apex, nadir's over here. All right, look. The spacing on here is no good. See how tight those are on top of each other? If you're taking multiple entries, never space on top of each other like that. You need time and space on these orders. Time and space. Okay, so what happens? He has, I don't know if this is 5 or 10 minute bars, right? He's got 5, 10, maybe 15 minutes, give him the benefit of the doubt if they're 5-minute bars. But you also don't execute on top of each other. You don't execute a few pips apart. You execute 10 to 20 pips apart. Okay, so you would go market. He could have went market right here, which he did, waited for some spacing, and then maybe set 20 pips down here, and then he actually caught the low. Would have been 20 pips lower, and he had it. But I want you to execute this on the go side. This is a practice drill to see how close you can get it. And listen, a lot of people don't want to do this drill, but this is the drill that is a game changer for everybody struggling in the business. And the crazy thing is, I've had people here for 8 years, 7 years, haven't done the drill, and they finally did it, and they go, man, I'm a moron. I go, okay, well, why are you calling yourself that? Because if I just would have listened to you 8 years ago and did the drill, I would be that much further along in my career. So look, you paid me to tell you how to learn this business and get it. And that's what I'm doing. I'm telling you. The problem is you don't like what I'm telling you. You want me to tell you some bullshit like, oh, just come in and take some trades and you'll be successful. That's not how it works. Think of every single planned sporting event, military activity, anything. It's planned out. This is no different. Okay, my hero, Tom Brady, he's not really my hero. I admire him because he's fantastic. He's at the top of his game in what he does. His personal life is in shambles. Anybody that follows him knows this. His personal life is in shambles. He's pissed off all the time. It's not a good model for anyone. But here's the deal. He plays football like nobody's ever played it. Why? The guy gets up at 5 o'clock in the morning and he eats and breathes this stuff until 10, 11 o'clock at night. goes home, doesn't really see his wife or his kids, goes to bed and does it again. Okay, there has to be some happy medium between trading and balancing your family life. I understand that. But if you're a single dude and you join me and you're not doing the drills, shame on you, man. If you're a married guy and you're here and you're not doing the drills, maybe a couple hours a day, shame on you. I didn't make these drills up. They were given to me. They're legit. They work. Okay. And you know, I tell you guys this all the time, and I need to remind the new guys. When I used to do the drills, I used to use a notebook and a piece of paper. We didn't have little fancy boxes that I had programmed where the stop hunts are and the markers. I used to come in at 1 o'clock, which is, by the way, where this is supposed to end, and I would measure the distance between here, the high and low board, and I would write down the numbers, right? I don't know, 2307 down minus 50 would be 23. I made 22. I made it too hard. 2340. How about 58 or something? I don't know, whatever. That was the spread. That's the initial spread of the day. I used to have to do the math. Then when the dealer would cut the high or low, in this case, he would cut the low, he would hit it. All right, minus 10, 2250 minus 10, 2240. Write it down. All right, he hit it again, cross it out. Where'd he go? 2228. Write it down. Oh shit, he hit it again, 2215. Cross it out. That's how I did it. There was no boxes and no easy stuff. Hold on, I need a drink. I'm excited today. My throat's burning. All right, so look, it's easier now. You have the tools in front of you. I'm telling you that the high-low drill is your first order of business if you're brand new. If you've been here a while and haven't done it, do it, send it to me. I want exactly these pictures. I want the strings on there. I don't want some bullshit statement on the bottom that I have to go through and read. I want you to take the statement, drag it on here, and send me. These are called strings, by the way. I know the chart's getting crazy here. These are called the strings, your trade strings. This is what I want. I want to know where you got in and where you got out. So if you're brand new, go to the video on how to do the high-low drill. If you've been doing the high-low drill and you want to turn it into money, then this is how you do it. You cut the M's and W's in half and you execute on the go side and you get your orders in. And you buy and sell the stop loss level again with a stop slightly out of reach of the dealer. And then you close all using the Heidi close all script at a landmark that we talk about, AR50 line, AR50 and a moving average. This would be a good zone to exit, even though it spikes through in this instance. But if you notice, it AR50'd and looked like it was painting M and then had one more push up, right? You can use a close back below the catch up, never happened here. There's multiple ways to get in and out of trades. You just got to pick a systematic approach and do it consistently over and over. All right, this chart. So we're looking at it. He did really good on this chart. The only thing, I'd like to see more spacing between here, right? It has to be time and spacing. But if you build a grid, it's going to get in how it gets in. So my suggestion, if you're brand new, struggling, haven't had any success, build a 3-order grid, market and 2 pendings, and then a 10 pip stop below that using the spreadsheet, okay? If you're brand new, I'm just going to tell you straight up, use equal orders, man, because most orders won't get picked up. So if you start getting good enough where the first order is getting executed only, then you're starting to see things more clearly. And then that's a sign that you move to all in, all out. So what it basically is, you follow the spreadsheet and you just take your order size at the appropriate time. But the point of the drill is to hone your skills into entry. If you need to start earning money now, qualify for a $100,000, $200,000 account using this method and scale that account 100% return, 200% return, 500% return. Take your check, put it in the bank, live on some, and build a backup account for yourself. And when you want autonomy and you have $500,000 in the bank, you'll be pretty friggin' autonomous. Okay, make sense? All right. See what else I got tonight. I think I covered it. I was going to draw for you some more. Okay, this is just some basic stuff here. Look, 20 pip spacing, 2 orders, 3 orders. You got to decide. I'm going to talk about this and wrap it up. Hard stops got to be 20 or 10 pips below the grid or above the grid. And you're going to see how good you are at the drill. You have to have a defined risk. You have to know the amount. It's either 1%, 2%, right? If you're going to take multiple pairs, and if you looked at my statement, I traded everything back then. I've got more focused and I'm all in, all out on one or two pairs. That's all I look at. Mostly pound dollar and euro, but I look at the sixes, 6E and 6B. It's the futures equivalent to the Forex. You guys know that about me. I've been talking about it for a while. Okay, so this is it. Simple. You got to have a hard stop, man. You can't just, I've seen people do it and they go, oh, that's how you do it. They just keep buying or selling into a level. It's not how I do it. It's systematic, man. You have to have a defined risk. So maybe you set up, practice doing a 2-order and a 3-order grid, see which one you have more accurate with, not get stopped out, see how you fare. And then you start all this in demo, man, before you even try to qualify for an account or anything. All this stuff in demo, whatever their rules are. Okay, somebody wrote in here that they allow you a demo, as many as you want, to follow their rules. So, yeah, follow the rules. Lauren, you could ask in the group about the funded. I think people are getting paid in FTMO. Just Google FTMO trading or FTMO funding account, and I think you'll find all the rules there. But it's an amazing opportunity, man. I'm glad you're asking about it. Happy to see that. If you have any questions, send me an email personally, and I'll work you through it. I'll walk you through it, whatever you need. So anyway, look, the thing is, don't waste your time getting funded right now unless you got your systematic. Okay, brand new people, come in. I need a business plan from you. I need a 12-week map, right? I need your signature trade, your main trade you're going to take, and if it's going to be this, that's fine. If it's going to be aggregation, that's fine. If you've done the high-low drill and you feel like you're right there but you're struggling, this is it right here. No, Muhammad, that sheet's not available, man. I don't know where it is, and I'm not going to dig it up. So like I said, no one, I gave it to you. You were here, I gave it to you. I gave the sheet when you were around. And if you're looking for it, it means you don't have it. So I have no idea where it is because we switched forms over, we changed web addresses, and a lot of that stuff got transferred over and it's in the form somewhere. It may or may not be. 12 weeks or 12 months. Okay, 12-week year, which means you take every quarter, which is approximately 12 weeks, and you treat it with the aggressiveness of a year. Yep, and listen, you can put it together, you can send it to me, but I'm not posting it for anybody. Don't post it. Because you're going to do the work, it's going to mean something to you. When I post it for someone that hasn't done it, pardon my French, it doesn't mean shit to anybody. Because I did the work and I posted it and nobody ever asked me about it. I posted it twice actually. So it doesn't mean anything to somebody that hasn't done it. So you need to do the work so it has meaning and value to you. That's where it's not the numbers, it's doing the work. It's the process, it's not the product. If that makes any sense. The aha moment comes from doing the work, not from someone handing you the sheet. So you need to do your sheet in your time and you need to have your moment. Right? Make sense? Okay. So build out a grid, figure out your risk, your parameters, whatever they're going to be. If you're going to use 20 pip spacing, and you'll start to see if only 2 orders are getting picked up. Start out with a 3 pip grid. I mean, a 3-order grid. And if 1 and 2 gets picked up and 3 never gets touched, you're in a good place, man. So then make these equal, right? And make a 2 or 3% risk if you're not losing, and then just scale it, man. Simple. All right, let me see. 1 or 2 more slides. So the idea is that a lot of people need to earn money right now. I know the economy's bad, stuff's going on, but you control the economy in your house. It's your economy. There's a lot of shit going on in the world right now. There's a lot of problems. There's a lot of supply chain issues. Doesn't matter. You control this. This is totally up to you. You're making $25,000 a week, $50,000 a week. There's no supply chain issues in your house. You just pay for it. This gives you a chance to earn money right now. You can get qualified or funded somewhere. There's a couple of different companies out there. I know that the main people in the group are using FTMO. I think that was the higher rated one for Forex. There's a couple people, I think a company called E8. It's the letter E and the number 8. I've heard that's, I think it's futures and Forex. I heard some people having success there, getting money out. But my Forex funds, someone mentioned, yeah, this is the thing, is I'm never going to push something. I have no financial interest in any of this crap, but I'm just telling you that people are getting money. Let me see. I know a guy that just got qualified, FTP. Who are they, bro? Print it for me real quick. What's the name of the company? Is it FTP? Okay, wait, here we go. Uh, Funded Trading Plus, FTP. And you've got money out with them? Yes? Okay. Yeah, this guy's in the group, funded, and you got a check. That's all that matters, man. Okay, so hone your skills by being in the market where real money trades, man. And even if it's someone else's money, if you're not autonomous, I know someone mentioned about being autonomous. If you're not autonomous right now and you're tied to the desk and you have a smaller account, you might as well be tied to your desk with 200 grand with no risk to you other than your initial entry fee. I don't know if that makes sense. It makes a lot of sense to me. Remember, I banged up 3 grand on a credit card, and that was almost a month's pay when I was a firefighter. A month's bring home. I'm talking about 18 years ago. 3,000 bucks on a credit card at 20% interest, whatever the hell it is. It's just different time, man. If you're not taking advantage of what's available to you in this era, shame on you. It's there, man. And like I said, you guys know I was talking shit beginning of the year. I was like, okay, let's see if anybody gets paid. Well, people are getting paid. They're getting their check out. Okay, if you're making 10% on 3,000 bucks or 10% on 200,000 bucks, do the math. You'll be where you need to be in a relatively quick time. All right. Okay, man. I think that's all I got. Let's see. What do I have? I think you got to have a model. Yeah, you must build a model based on your risk percentage profile. Use the spreadsheet, 2 orders, 3 orders. Start with 3 orders. If 3 rarely get executed, then drop down to 2, recalculate your sheet. I just said that. The spreadsheet is the guide for all this stuff, man. Use the spreadsheet to define the risk model. Build a 1% aggregate, 2% aggregate. Start out maybe 2%. If you're going to trade multiple pairs at multiple times, maybe you want a 1% risk, because then you're going to have 4 or 5 different pairs open. You'll have 5% if you have 5 trades open. This would be a 10% risk. It's dangerous because, listen, until you're certain and good at it, you can have all 5 trades move against you and go to stop. I recommend trading 1 or 2 pairs and use a 2% aggregate. You could trade 1 pair and use a 2% aggregate, and you can go in twice. You go grid, grid. If it doesn't work out, you go grid, grid, and then that would be it. You'd have to move the stop from here, put the hard stop on all the orders at the bottom of this. And you would have 4% open float risk, and then depending on your draw, where it turns. There's a lot of variations on the theme to this. I don't want to discuss them all tonight. I don't want to drive you guys crazy. But whoever wants to start working on this, send me an email. Send me what you got. I'll go over it. Send me a set of rules and your guidelines of what you want to do. Send me a spreadsheet with risk. Send me your account size roughly, right? If you're trading a 100K account, right, then I want to know 2% risk of that and how you're going to figure out a model. Send me the model. I'll check it out for you. No problem. Okay, emails. Last thing I want to talk about. It's almost 8. I'm caught up. So except for maybe last night and today. So if I haven't answered you, I don't have it. Okay, I finally got caught up. And if I haven't answered you from, what's today? Wednesday. If I haven't answered you from Monday before Monday, Sunday back, Monday, Tuesday, if there's any in there I might have missed, I'll recheck. But I am caught up to like Sunday night going into Monday morning. Okay, so if I haven't answered you, resend it, please. And I'll get back to you pretty quick. All right, man, I'm going to end it here. Any other questions? It's exciting stuff tonight. I'm happy for you guys. It's a good time to be in the business. There's a lot of money flowing out there. You just got to grab your float, man. All right, thank you, Steve. Back at you, brother. Okay, good night, good night. See you guys. Appreciate it. See you next Wednesday. Good night.